Now starting. All attendees are in listen-only mode.
Okay, good morning, everybody. Can everybody hear and see me? Good morning, guys. Okay, let's get rolling. We got a lot to do this morning, so let's get the show on the road. Am I recording, Stan? Yes, I am. Okay. Uh, let's start with the equity markets. Okay. Um, I will tell you straight out that on the bigger scale, on the SPX, I may have discussed this before, but this entire overlapping structure here is very hard to really gain a good perspective on. Maybe this could be a 1, 2, and all of this is a third with a 4, and then a fifth wave higher now to be seen. There are just so many ways to possibly count this. One of them being this is an ending diagonal. But because there's so much overlap in it, that's what's leading me to an ending diagonal consideration. However, when I look at the ES, and it's usually the opposite, by the way. When you go, the ES usually is much more overlapping than the SPX, but on the ES, I'm getting a relatively good, albeit very, very extended fifth wave up here, where yesterday we came down exactly to the 0.382 retracement of this very extended third wave, if that is the case. And the same thing happened in the IWM. So I'm looking for a higher high on the ES and or the SPX, potentially approaching as high as 2710 on the SPX, depending on how much more we extended we get. This is clearly extended beyond the target we set 2 years ago. And it happens during bull markets. But when you get to your overall target, they say bulls make money, bears make money, and pigs get slaughtered. Well, I've learned that lesson a long time ago. I don't like being a pig. So when markets reach my ideal target region, I start turning towards, okay, where's the market now going to turn? So I turn much more cautious, and I have definitely been much more cautious of the market over the last several months. No question about it. I have been much more cautious, and I intend to remain cautious because patterns can extend only so far. And currently, and by the way, when they finish extending, the reversal usually is quite strong. And it will usually take you right back to where you initially expected it to go. So I am definitely expecting us to retrace back towards the 2400 region. Definitely. The question is when. And this is something I've been playing around with when I was looking at all the different charts. And I've had this as an alternative on the SPX for a little bit, but I think the XLF is what has really taken me there. But let me start with the ES. For now, as long as the overnight low holds, I'm looking for a higher high in the SPX ES. If we take out the overnight low, then to me, that's strongly suggestive that that is our first indication that we really have a top in place. But for now, as long as the as long as the overnight low holds, I'm looking for potentially the 2710 region on the SPX. Okay. Let me show you the IWM, which is slightly different. The IWM, and this is why the IWM is a little more of a question whether it's going to make a higher high or not. Double tops and or double bottoms are very, very difficult to use as a guide for a wave structure. Why? Because the question we have is this all of a fourth wave with this being a fifth? Or is this really, because the structure in this is really not clean, or is it more an A, a B, and then you have 5 waves down? Now, why is that for a C wave, which means this is the fourth wave, which is what the yellow count presents? Why is it so important? Let me explain why. If this really was the top of a B wave, and we're starting a C wave down, what you need to see in your C wave, unless it turns into an ending diagonal, or WXY, which are less common, more common scenarios. When you finish your B wave, you're looking for a 5-wave structure in the opposite direction. We got a 5-wave structure in the opposite direction. But because we did not hit a higher high, it has left this potential that this is a 3, this is an A, B, and this is a C wave, and that's why you have 5 waves down. So when you get a double top, it causes a certain amount of complexity in the Elliott wave structure. And it really kind of masks, to some extent, what the market is trying to do up here. So that's why I'm telling you right now, I'm at 50-50 as to whether or not we've actually struck a top. But that's higher than I was last week, to be honest. It is higher than I was last week. I really thought we really struck the top here, and this was going to be an ABC structure to complete a B wave, and it still can be. But if you get a higher high over yesterday's high, it strongly suggests that you could see a marginally higher high. You could get up to that 156 and change region. I'm not saying we will. I'm saying that a marginally higher high can definitely be seen. And that would align with the SPX and finishing off a 5th wave. It would align with the XLF as I'm showing here. Still can get a 5th wave higher. But let's look at the bigger perspective as to what we can expect into 2018, because I think that's really what's really on most people's mind. And I think that really can give us a lot of insight into what we're looking at. My larger degree expectation is I would prefer this being the top of wave 3 in the SPX finally. But you know I have that alternative, which needs one more 4-5. Now, when I look over at the XLF, I have no alternative here. This is a perfect count for needing a 4-5, which tells me the market is going to likely, because it's hard to believe that the entire market is going to collapse in a several hundred point drop while the XLF is going to levitate. Chances are and this is why I look at other charts when I have questions about what I'm seeing in the market. What the XLF tells me is that the market is likely going to levitate for the first quarter of 2018. I don't expect any major drops. You can expect, my expectation is that the XLF is going to, the SPX is going to test that support region. That is my expectation in the first quarter. We will test this probably in January, most likely in January from what I'm seeing. And that's the same here, that we will likely test support. But the XLF is telling me we will get another higher high in the XLF. So the question is, will that same apply in the SPX? I think it can be a marginally higher high, maybe even a double top, 2710, 2737 from here. Now, if we break this bullish support and drop down towards the 2520 region, if on the next drop we break down to the 2520 region, that tells me that the next rally will likely be a B wave rather than a 5th wave. Now, that B wave can head pretty high. B waves can sometimes even make higher highs. But it tells me that the likely scenario is that the SPX will make a B wave rally. At the end of the day, I'm not so sure it really makes that much of a difference. Because at the end of the day, what you're looking for is what seems to be likely setting up is a drop into January, a rally towards March, and then a drop into the second quarter of 2018. That seems to be how this is playing out right now. IWM gives us that perspective almost, probably most beautifully. The IWM really does. And that's how I think this will likely play out. I think you're going to, in the IWM, I think you're going to test the November lows on the next drop. So ultimately, I think the IWM can potentially outperform on the downside into January. That's an assumption. That's how I'm looking at this right now, because the IWM's bigger pattern is more cooked and baked than others like the XLF. So when we complete the downside in January, my intention is to go long the XLF. Why? Because to me, that seems the most likely to get a higher high. So I'll probably take some longs in IWM and SPX, but I'll probably more heavily weight into IWM, maybe even NQ. Because for those of you that follow Xenia, you'll see that she has the same potential in the NASDAQ as we're looking for in the XLF, and possibly also the SPX. So that is just my overall perspective of how I think the first half of 2018 is going to go. But please remember, whatever correction we get in the first half of the year will likely be a strong buying opportunity. Because from there, I think we're going over 2,800. Okay? That's what I really think. I really am not. I've not been tracking NQ closely, other than recently, and the only reason I have is because I've used it to identify that market is not topped. Just like I said with the IWM, where I cannot consider the market as having topped until the IWM completes its five-way structure off the November lows. I then went to the NQ. The NQ told me that the market has not topped yet, and now I'm moving over to the XLF. The XLF is telling me I got another 4 or 5 coming. I'll look at these when I have questions about the SPX. When the SPX is abundantly clear, I don't need it. But when the SPX is cloudy, like it has been for me, and it has been for me now for several months, I'll look at the other segments of the market to give me clues. And what it's telling me is we're probably, like I said, we'll get a pullback likely in January, but we're probably going to levitate until probably around March. So if you're frustrated with what I call bullish fatigue, at least mentally prepare yourself from what I'm saying, or for what I see over the next half a year. Okay, so that's my spiel on the overall markets. Let's look at metals. I will tell you this: I have enough in place now to even consider a top in gold, but gold right now is probably the least. On the smaller scale. On the smaller scale, gold is probably the least clear to me. So what do? I look at other segments of the market. On the GDX, and I think, like I say, sometimes, I've been doing this for a while, guys, and sometimes, watching how markets move and turn at some of these levels, sometimes even astounds me. And I've been doing this for a long time. And I was looking for this. This was what I was looking for, and it still just shocks me. Why? Market bottom within 1 penny of our support region. It then rallied within a couple pennies of our target, not our target, our resistance. So the market gives us some really, really strong resistance and support levels where it can potentially turn. Using all this fib stuff. It blows my mind. People claim that this is voodoo. And it blows my mind when I see this. Even though I've been doing this for so long, it still blows my mind. So where am I now? My primary perspective on the GDX is that this rally is a fourth wave rally. And the more bullish scenario has to prove itself to me. And it's a fourth wave rally in a bigger ending diagonal. That could take us most of the first quarter to finish, believe it or not, which kind of almost aligns with this expectation I'm having where the market may not top out until the end of the first quarter. So it almost aligns. I'm not saying there's a correlation, but it's interesting how it's playing out. For now, what I'm looking at is I've got an A, B, like I noted over the weekend. The drop was really corrective looking. And then I got a nice impulse off there, followed by what seems to be a corrective overlapping downside, followed by another impulse, which told me I'm going to expect higher as long as we hold certain supports. Right now, as long as we stay over 2210, I got strong support for a continued rally. If we break 2210, I start questioning that a little bit. But as long as we hold that micro 2210 level, then I have perfect confluence at 2285. Perfect. If we can blow through 2285, your next confluence is up at 2315. So right now, between 2285 and 2325 is where I'm seeing resistance. This is where I am seeing resistance. And this resistance can turn us down towards the 19 region. Okay? And that's going to be what I'm noting on my daily here. See that? And ending diagonals can be quite frustrating until they reverse. Because when they reverse, folks, they reverse so fast and strong, right back to the point where they began. Where's that? Right up here. So you could see a reversal from here to here. If it takes us, it could take you a full week. It could take 2 weeks, but that's pretty damn quick. I'm looking for a strong reversal once this completes. Unless the market can start pushing through that 2315 region convincingly, that's how I'm looking at it. Okay? The ABX is another example that I'm looking at. To me, I've only got 3 waves off the lows so far. Is it possible the ABX could have it struck its lows? I've got an alt bottom in place, just like I'm looking at the GDX. The better structure would provide us with a lower low with even more divergences, and then it's going to run like a bat out of hell, I think. Silver on the micro, what I'm seeing, we have resistance in this box. A equals, this looks like 3 waves up. Could this be a 1, 2, 1, 2 off the bottom? Could this be a 5th wave, a 1, 2? Maybe. Silver usually plays it in its own game. So silver is a little more complex. I think the GDX is a little more clear right now. But silver right now has a resistance box of A equals C starting at 1638. And it goes up to 1670 with C equals 1.618 times A. This is my resistance box. Pretty much in line with GDX. If silver should just run like a bat out of hell out of here, it would give me a much better indication of this. And silver could then be pulling back in a wave 2 while everything else makes a possible lower low. Well, miners, that is. There are a bunch of miners that look great, by the way. So that's my metal spiel. As far as the USO, this has probably been one of the toughest patterns all year. The USO right now looks like a triangle to me. It really does. So until we're able to break that prior low, I think I got a triangle here that may still want to push up to that 1250 region. Maybe we only top out at 1190. I don't have a great way of identifying good targets on this. It is just the whole structure has been way too amorphous without a really solid internal structure for me to be certain. To me, this looks like a little 4. Me needing one more push higher. Once you break down below this 11 region, I think, again, I'm looking for a break of 11 along with a break of this long MACD support. That's going to tell me an A wave breakdown is in place. I'd be looking for a B wave rally, followed by a C wave down. That C wave, no matter where it's pointing to, whether it's going to be a high consolidation in this region or if it's pointing all the way down here, wherever that C wave is pointing to is where I'm going to start buying. For now, I'm still in a wait and see mode on this. Okay. Lastly is the Dixie. I'm realizing I'm getting a little close on time here. This C wave still looking good to me. When you take out that pivot, and we may have to modify that pivot a little lower if we get a lower low, but once you take out that pivot, you probably are in wave 3 of 3, heading towards the 97 region. We have to modify this target a little bit if we make lower lows. But once you take out this pivot, and like I said, if we make a lower low, I'm going to have to modify the pivot. The point being, once you take out the 764 extension, you can generally, and I'll give you guidance as we see it happen, assuming we're going to take it out and head right up to the 95 region. You're going to put your stops right under here, and you're going to let it run, and we'll move stops up, and you can start taking profits up here if you're trying to long this. Personally, I don't like trading B waves, but that's me. Any questions? Where is the blue 5-box with today? 97 region right now. I don't know. I really don't know dates. I'm not giving you dates, guys. You know, what I've learned about my time in doing this work, and I have followed more cycles analysis than you can imagine. Anybody that tells you that they have a beat on time, I've never seen anyone more than 50% right on that. Any cycle analyst who tells you they have a beat on time, I've checked them out. I've never seen anyone better than 50% of the time. The crazy thing is, I've seen more cycle analysts that try to play on time blow up more accounts than anybody else. So if you're looking for time, I really don't. Time is not something I believe that you can really glean. I really don't believe. Time, I think maybe you can use estimations on time. Anybody that says that they, and I'm not one, I always look into this. I have done more reading on Hearst than you can imagine, and it does not answer the basic questions that I have about the methodology. That's why I've not found a single person who is better than 50% on timing on that. And ultimately, I think it hurts more than it helps. That's why I think it blows up more people than it helps. Any questions? Could you recommend any high probability trades we could try right now? Well, oh boy. Here's the problem. I think the higher probabilities right now, other than these final long moves up here, I don't even think the final long moves are necessarily high probability, but I think the higher probability trades are to the downside more so than the upside. But I'm reticent to tell anybody to be shorting aggressively in a bull market, especially as long as we remain over support. So if you want to be trading something that's a little more high probability, once you break below this low, shorts are more high probability. Once you break below this low, 2763, shorts are more higher probability. So, my expectation is that the market will be getting a pullback soon. So I'm looking lower more so than higher. Up till now, I've been very, very, very cautious. Now I'm starting to look lower much more so than higher. But I can't tell you it's a high probability trade to short a strong bull market. I'm very reticent to say that. If those supports break, I think your higher probability trades are going to be on the short side rather than the long side. Until then, The best traders are not always in the market. Remember that. Remember that. Best traders are not always in the market. From what I understand, a lot of the really good traders through history have only been in the market a third of the time. You don't have to always have a trade. When you break those supports, I think your higher probabilities are going to be to short the rallies until we get to this support. That's why when the XLF reaches this support, I'm going to determine and watch where is the SPX, and that'll tell me much better. Is this going to be the alt 4 or is it going to be a B wave rally? At the end of the day, I don't think it's going to make a huge difference. So high probability right now, I would say the highest probability trade I would have on here, but I don't really trade the dollar, is as long as you hold 92.90 on the dollar, I think you're looking for a rally towards 97. It's probably the highest probability trade I see right now in terms of an impulse. Okay. Do you see GDX going to 22? As long as you say over 22.10, I think GDX is a high probability. But again, I don't like trading corrective garbage. When markets move into a good impulse, I like trading impulses. They're much more, what's the word? Predictable. Much more predictable. So that's why I really like trading impulses more than corrections. This, to me, seems to be corrective in nature. So that's why I say yesterday I said, as long as we hold this level, I'm looking higher. Now I'm saying as long as we hold that level, I'm looking higher. But to me, it's still a corrective trade. The most impulsive right now potential is the dollar. As long as you hold 92.90, I'm looking for the 97 region. You break 92.90, I think that's a problem. So that's your parameters for probably the best looking impulse I see on the charts right now. Okay? Any other questions, folks? We're 3 minutes away. Okie dokie, folks. Have a good day. I will catch you later. Take it easy.